This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. And today I'm going to talk about a retracement trade. I want to explain how you want to use the price action relative to the moving averages in conjunction with MACD in multiple time frames. All right, it sounds like a lot, but I'm going to try and simplify it for you. In this situation, we don't necessarily have to be too consumed about ADX, because typically when I do this type of trade, it's more of a quick trade, hit and run. I call it hit and run trading. But I think it can be really useful, especially in the environment that I think we're about to go into, which is less trending and more trading, more of like a trading range, where we don't catch a big move to the upside like we did in 2021, where everything just goes straight up. And we don't go straight down basically like we did in 2022. We basically, move around, bounce off support, sell off resistance. I think that could be the type of environment we're playing in for now. And so these type of strategies I think can be really helpful. Now, before I get into the chart and the example today, I did want to mention that I'm going to do a webinar for the International Federation of Technical Analysts, and you are invited. I'm going to post the link in the description below. You can see the live show. It's going to be at 1 p.m. on February 14th, 1 p.m. Eastern Time, and you're allowed to do that. There's going to be a significant representation of technical analysts around the world. Actually, there's like 20 different countries that are going to be on. But I'm going to be presenting, and I'm going to be talking about ADX and MACD. Now, a lot of this might be review for you, but I'm going to allow about 20 minutes at the end for questions. So, if something is of interest to you there and you want to ask a question, you should be able to pull that off. Bruce Frazier from Stock Charts is actually going to host it, and I'm going to do my presentation, and then we're going to take questions at the end. So you're welcome to join. Only the people as a part of the IFTA are going to be able to see the recording. So if you want to watch the live session, you can do that. All right, let's go ahead and get into this example. So I've got Merck up here, and what I want to explain is we need to have this tactic, I believe, if we want to be a little bit more active in this environment. And why do I say that? Well, as I said, in 2021, we had an environment where the market just had a trend, and we were pulling back, and we had lots of opportunities to play trend trades. We've got a monthly moving average in the S&P going one way, weekly going the other. It's not the type of situation when you don't have that kind of confluence amongst those moving averages. I think you have to be a little bit more careful about trying to find trend trades. Now, as I have posted and what I've talked about with my subscribers, you can find trend trades and you can start small and you can reduce the risk, and there's nothing wrong with doing that. But I know I've got a lot of guys that like to be a little bit more active and trade a little bit more. So I want to give you a technique. And what I want to do is take a few of the patterns from my book and my course and just give you an example of how you go about using them together. All right. So I've got the monthly chart up, and we can see that we're a little extended from the 18-month line. Now, this is by far anything that I would consider to be negative. I mean, we just broke out of this big base in Merck. We also have strong ADX condition. Look at the MACD confirming. So this is bullish, but we do have 1, 2, 3 bars up, and it looks like we're getting a little tired on the monthly chart. All right. Not the end of the world, but it is something that we want to be on the lookout for when we're looking at bar by bar analysis. Now, if we go to the weekly, also got extended here. And we were getting pretty far away from the 18-week line. MACD was getting pretty far from the 0 line. And ADX was very, very strong, but we did have some DI divergence developing as this kept pushing higher. And that doesn't even qualify as official divergence because we don't have a true pivot here. But you can see that the buyers are losing a little bit of strength. It's not like the sellers are strong. We're just losing a little bit of strength. Now, this whole part of the equation is less important to me in this type of trade because I'm I'm not really looking for any kind of a reversal or anything like that. I just want to look for a check back. And I don't even care if it comes back to the 18-week because I don't even need that much, and I'll show you why. So when we go to the daily chart, now I know I'm a little extended and maybe a little tired. I'm a little extended. Now maybe we get some type of a pullback, right? So what we're looking for on the daily chart is one of our signals, right? So first thing that happens is we make this push to the upside and we get divergence. Now, I don't typically like to trade off of divergence by itself. I don't want to do this trade and just say, hey, the moment this starts coming down, I'm going to short it. I want to look for probably the next signal. Now, the next signal is almost always a pinch play. And you can see the pinch play that developed. Now, the other thing that happened is, if you notice, we went through this long extended bull run. You see how this is a pretty extensive bull run on the daily chart? And I want to zero in on this for a second. And so we get this move to the upside. Pretty nice move, bounces off the 18, bounces off the 18, but then we bounce off the 18 again, and we don't get any real follow through, and then we bounce off the 18 again, and then we get a little final burst. So we have this bounce off the 18 and don't get any follow through, bounce off the 18, get very little follow through, and then one more time, you almost get like a climatic move with a gap up and then a quick reversal with the red bar coming back down through. And that is a pinch play off the high. So if you wanted to be real aggressive, I guess you could try and take that. I'm more inclined when a stock has such strong conditions on the longer term time frames to wait for a little bit more confirmation. And that would be this pinch play right here. We still have plenty of room before this finds support at the 0 line. And we've had a really nice higher bottom with the small range bar right here. Now, the other thing that I think is really valuable by waiting a little bit, we get a little bit more confirmation that we've got a key resistance level at the midpoint. Okay, I covered this extensively in the course. The midpoint of these big bars are important. There's 4 things that happen on every bar that we want to know about that I cover in the course. And so that's one of them. Now, we've rallied back up and we form our pinch and trigger. All right, but as you know, what I like to do is go down one more time frame and get the trigger off the smaller time frame. And look at what happened here. We get a move to the upside, a pullback, and then a higher high. So we get our ABC to the upside. We get the 2 moving averages just about to meet right as the MACD is hitting the 0 line. So in this case, I mean, I know I talk a lot about pinch play, higher time frame, 0 line reversal, lower time frame. In this case, we have a bearish pinch play, okay, and a 0 line reversal. All right, a little bit different than I normally look for. But here's the kicker in what's taking place on the daily chart. We have this extensive move to the upside, and look at what happens. We get a 40 to 18 bounce. This is a pretty big confidence booster for me. If I know a stock has not tested the 40 all the way, and we've made this really nice move, and then we make this run to the upside, and this is dying out, and this is dying out, and then we finally come back to the 40 and rally up to the 18, which is now rolling. Now I've got my 40 to 18 bounce pattern, and that's taking place with the pinch play and a dying ADX pattern. All right, so I'm kind of putting it all together. Now, if I go to this hourly chart, I know because I've had my higher low and higher high, I can draw in the trend line with the 0 line reversal. Now, I know most of the time I'm looking for a low ADX condition, but if you notice what happened, we had this violent move, and this represents that big red bar on the daily chart, and the midpoint of that being so important. And so because this was so strong to the downside, we had strong selling pressure. You see how red DI caused the ADX to stay up and not go down? So when I see that, and then we rally back up without green even making, look at what happened. Green, so let's isolate the green for a second. We make a lower high, a lower high, a lower high, another lower high here. But by that time, the trade had already taken place. Look where this was. So when this triggered, we were at another lower high, lower peak, right? Lower peak, lower peak, lower peak. So green is making lower highs all the way through this rally to the upside. That tells us we can play for continuation. Doesn't hurt that we've got the zero line reversal pattern on the MACD, but don't let this keep you out with this ADX pattern. I know we like to have that low ADX, but in this case, we know that the buyers are not strong and we're only playing for a short-term trade. Now, the way I would handle this is I would take this trend line break and put a stop right here. Now, because this is a short-term trade, counter trend, I know the monthly and the weekly are in a positive, they're in a positive trend. They're both moving higher. Then I don't want to play for a big target. This is hit and run. And how do I handle hit and run? Well, what I like to do is if I can get 2-to-1, that's great. But if you looked at this trade, it was probably around a 111.25 entry with a 112.50 stop. So I'm risking about $1.25 or something like that. And then it moves down. It actually gaps down a little bit here. But then look at what happens the following day. You get this really big gap down bar. I mean, I'm taking the whole thing in this case because I know I have a trend on these two time frames. I'm not going with them, I'm going against them. Anytime you can take a 2 to 3 day trade in your favor and get a gap in your favor, you go ahead and take that right on the open, all right? And that would have gotten you probably about 2.5 to 1 on that trade if you played it that way. Now, what I would do is on this gap down, I would go to a break even because I don't want to give back and lose after a pretty good trade. But in most cases, when I'm doing these types of counter trend trades, I usually go for 2 to 1, and that's it. I'm not looking to trail a stop. I'm not looking to make a huge win. I'm trying to take the risk out at 1 to 1, and then if I get 2 to 1, I take the whole thing. So that would be the goal. If you can get good entry, that's the way I would play it. So I think this is a good example of putting together a number of different things from the course. Looking at MACD and different signals in MACD, looking at the 40 to 18 bounce pattern, looking at how extended you are from a moving average, looking at when a stock is getting tired after a 3 to 4 bar run, and then your opposing trend trigger using the zero line reversal. This would be trigger number 1, by the way. All right, so that's the example for the week. Go ahead and post any questions or comments, and we'll see you next time.